Okay, so in this video, we're going to talk about Chipotle stock that is ticker symbol CMG. So this stock is on massive tear, guys. So in this video, we're going to talk about Chipotle's recent earnings release and whether or not I think this stock is a good buy or sell. So be sure to watch the entire video so you can find out at the end whether or not I think Chipotle is a good buy. And if you're new to this channel, I post videos about stocks every day covering high growth stocks like Chipotle, Tesla, and things like that. So these videos are 100% free. So if you want to subscribe to this channel and get more free videos in the future, just hit that red subscribe button right below this video and you'll get all my future updates, guys. So let's get right into it. Chipotle stock has been an absolute beast over the last trading session. So if I just quickly pull up this 1-day chart here, the stock is on a massive tear. It was up about over 12%. Okay, so the stock is up 16% over the last 5 days. So we take a look at the actual price. The stock is up at around $892. So Chipotle just recently released their latest earnings report, and that's what caused a massive gap up in stock price. So now we've hit a little bit of resistance right at around $910 or something like that, but the stock, I believe, is up in after hours, guys. So let's just get right into it. So what I'm going to do is I'm going to show you guys a couple of articles and we're going to go into the earnings report and stuff like that, and at the end of this video I'm going to let you guys know what my recommendation is. So guys, let's jump right into those numbers. So what are quarterly reports? For you guys that don't follow my channel, I like to go into these quarterly earnings releases. You can find this information by simply going to Google and typing in something like Chipotle IR or investor relations, and this is usually in the news releases section, guys. So it's very easy to find this information, and it's the best way to figure out what exactly is going on within this specific company. So as we look here, we have some awesome numbers for Chipotle in the first quarter 2020. Revenue 7.8% to 1.4 billion, and comparable restaurant sales growth increased 3.3%. So why is comparable restaurant sales important? Because that is the growth in the restaurants that weren't recently opened. So what some restaurant chains like to do is they like to constantly open a lot of different locations to artificially boost the sales, and that's exactly what happened to Luckin Coffee, guys. LK trades as LK, is a Chinese coffee company that was basically opening so many stores and fabricating their revenue. So comparable restaurant sales is the best way to see if a company is actually growing sales within the existing restaurants, not just the newly open ones. So as we can see here, digital sales 80.8%, and a lot of that was obviously due to the whole coronavirus pandemic. So what Chipotle actually did is they partnered with I believe they partnered with Uber Eats, and they had free delivery, so it made it really easy to basically deliver to their customers, and of course they saw a huge boost in sales. So as you can see here, operating margin was at 17.6%, very strong, and the company opened 19 new restaurants, closed a few, and of course they had 100 restaurants closed due to coronavirus, basically of those locations and malls. So as we see here, he says, here's the CEO, Brian Nicole. He says, I am grateful to all our employees for their commitment and efforts in providing guests access to our safe, delicious, high-quality food made from real ingredients during this unprecedented time, and eventually pivot our business with Q1 digital sales reaching our highest ever quarterly level of 372 million. Our strong brand, business model, and balance sheet gives us the confidence not only to weather this downturn, but to continue to judiciously invest in key areas so that when we come out on the other side, we might emerge even stronger. So guys, the report goes a little bit in terms of cash. And one of the nice things about Chipotle stock, one of the things a lot of you guys out there are always talking about with the airline stocks and the cruise stocks, they have too much debt. Well, with Chipotle, if you guys check this out, Chipotle has $909 million in cash and no debt. So guys, that is really rare to see a big company like Chipotle, publicly traded company without any debt. Usually you don't see things like this. So if you guys think that Chipotle is in trouble of going bankrupt or something like that, they don't have any debt. So obviously, that is going to really benefit them, that the company was is run so lean. And for guys that aren't familiar with Chipotle, is actually a spin-off of McDonald's. So for a while there, McDonald's actually just spun off Chipotle stock. It's like a Mexican grill, things like that. So basically, let's keep going. So it just talks more about the digital sales and stuff like that. So as we keep going down, I want to show you guys some of the exact numbers. We can look into that. So one of the nice things about Chipotle is that, like I said, they had increased their revenue, and they're doing fine in this pandemic. So obviously they're going to see some lower numbers probably in Q2 because there was a lot of restaurant closures and stuff, closings and things. But working with Uber Eats and other companies and being able to still deliver their Mexican food to their customers through the digital platform, that's only going to improve things in the future. Pretty good. It rose around 5%. And like we see here, this is just, I think Chipotle is, they got a lot of good things going on with their company. So now I want to article on thefool.com. After this, we're going to go a bit more into some of the deeper dive into some of the numbers. So this article was posted on thefool.com. It talks a lot about basically what's going on, some of the things that I covered earlier. So I wanted to show you guys what they think is going to happen in terms of Q2. So it says, not surprisingly, management pulled its guidance for the year as the virus has made forecasting for restaurants and other businesses virtually impossible. So weekly comparable sales hit a bottom at negative 35% in a week ending March 29 and recovered to down by high teens last week. So that's including right before in the beginning of April during Easter. So obviously we're going to expect sales to fall because a lot of those physical stores have been closed, and these numbers are covering Q1 before the coronavirus took place. But the good thing is, as you can see here, it says with comps down in the high teens, the restaurants would generate about $20 million in cash flow per month, meaning the company would still be burning $30 to $40 million with its current cash expenditures. So obviously the company is definitely going to have some cash flow, but they're still going to be suffering some losses because all of those store closures are going to definitely be affecting them. But the good thing is that they have $909 million in cash and no debt. So that's obviously one of the stronger balance sheets that you're going to find out there. So now what I want to do is I want to take you guys in a deep dive into some of the numbers and show you guys what's going on with kind of the whole compounded annual growth rate, which is one of the most important metrics that I like to look at to kind of eliminate noise and just focus on the long term. So you guys can easily find this information by going to finance.yahoo.com and typing in the ticker symbol CMG. You guys can find out all of it yourself. So what's on right now on Yahoo Finance. So I'm just going to show you guys a few more numbers, those compounded annual growth rate, and I'm going to tell you guys about my recommendation. The market cap here is $22 billion. So that might surprise some of you. You've seen the stock price pushing around $900 or so, and some of you might expect that this market cap of Chipotle would be a lot bigger. Well, it's actually chains out there. So at a $22 billion market cap, even though the stock is trading at so high, it could have a lot of growth in the future, or perhaps Chipotle will be performing a stock split to get the stock to make it look attractive based on a lower price, because it looks like we potentially be hitting $1,000 or more. So a stock split is in the cards. And then another number that I like is obviously PE ratio. Now the PE ratio is a little bit elevated in this case, 66%, but with high growth companies like Chipotle. Now this is not a hyper growth company, but it's a high growth company growing between 20 to 40%. I think that this is a decent number to pay. And like I said, with $22 billion in market cap, Mexican food is always popular. If you guys travel anywhere around the world, you'll see Mexican restaurants in almost any country. So it definitely has a lot of growth potential in the future. Now what I want to talk about is I want to address the question, individual shares are so high. You guys out there might be wondering, like, why are they so expensive in the first place? Like, why is it 900? A stock like Apple might be about $200, $300, like that. And a lot of that is the shares outstanding. So for Chipotle, there are only 20 shares outstanding. That is a very, very most companies out there are going to have probably closer to between, say, 200 million shares whereas a company like Tesla has somewhere around that range, and then you've got companies like Apple, which have billions and billions of shares outstanding. But the fact that Chipotle only has 27 million shares outstanding, this is just a simple demand. So that causes the price of each individual share to be very elevated. And as you can see here, the stock is currently trading $882. So guys, that's a high share price, and perhaps they might perform a stock split, which would obviously increase the shares outstanding and reduce the price. So we really don't know what's going to go on with that. But I just wanted to answer it, guys. Sometimes if you're seeing a stock price is trading level, take a look at the shares outstanding, and that could kind of sense. So now what I want to do is I want to take you guys back into the quarterly report, and I want to go over another important metric that I like to look at any company. So a lot of companies out here, they're doing business and things like that. We want to take a look at retained earnings. Now, the reason why retained earnings are so important is because it's one of the metrics that actually Warren Buffett uses whenever he's evaluating a company, and we would like to see a company increase the retained earnings year over year, quarter over quarter. So if we take a look at the latest balance sheet from Chipotle, this is the latest quarter, we can see that retained earnings is positive, which is key, and continues to increase. So in my experience, usually if a company has positive retained earnings, which is all the way at the bottom of the balance sheet, and that number continues to increase, then usually that company will continue to increase in value. That is the money that the company has actually earned and that they've been able to keep to use to grow things like their cash balance and grow the business and stuff like that. That is another very key metric, and like I said, guys, that is one that Warren Buffett uses. And then now, guys, I want to get into what I promised you guys earlier, those compounded annual growth returns. So like I said, I always like to look at this information. Morningstar is probably the only site that I found that has it so eloquently laid out. And you guys can find this information by going to morningstar.com, type it in the ticker symbol CMG, and clicking the trailing returns tab. So Chipotle Mexican Grill has been an unbelievable performer over the last 10 years. As you can see here, 19.81% compound annual growth return year over year. That is just phenomenal growth rates, and that puts the stock just around 20% to 40%. That's that high growth range. So I know a lot of you guys out here, you like hyper growth stocks and things like that. But I think Chipotle is a stock, it's not in the hyper growth range, which would be 40% plus, but it's still a high growth stock, and definitely a stock that doesn't get talked about a lot. I've noticed a lot of other YouTube channels and sites like that, and it seems like Chipotle is a hidden gem that a lot of people aren't talking about. So guys, now let's go back and I'll tell you guys exactly what my recommendation is. So obviously, you know, there is a big run up in the stock price, and shares have been trading like crazy lately. So the stock is actually up $100 on the past trading session. And so basically, should you buy the gap up, or what do you think? Well, in my opinion, I want to show you guys a longer term graph because I like to think long term when I'm investing in stocks. It's just much better. It makes things much more easier, and it's also better for tax reasons as well. So as you can see here, the stock is basically plummeted all the way down to around $400. There's a lot of support at 400, and a lot of this was obviously caused by the coronavirus sell-off. So one of the things that I've noticed in my many years of trading is that good stocks, not mediocre stocks or not average stocks, but good companies fill gaps. So what does that mean by filling a gap? What it means is that when the stock is off at high and it comes down and it's oversold and things like that, with a lot of panic selling and stuff like that, a lot of times that stock will not only return, but it will go higher. So what I think is that I'm not exactly sure. Obviously, I don't have a crystal ball, but Chipotle is returning 20% annual compounded growth over the last 10 years. And the company is continuing to sell more, and it's selling something that people need. It's selling food. So I think this would be a different example if perhaps they were selling something that people don't need. It's like not a basic necessity, for instance, travel. You know, travel is going to be devastated by this pandemic. So cruise stocks, airline stocks, travel booking sites, hotel chains, those companies are going to take 6 months to years to recover. But a staple like food can bounce back very quickly. So I think that this stock is definitely going to fill this gap, and I think it's going to go past that resistance level of 940 and potentially push $1,000 or more. And like I said, even though they're going to have a definitely slowdown in Q2, that digital revenue will help offset a lot of the losses that they have in those brick and mortar sales. So for me, Chipotle is an excellent buy. It's a stock that I should have bought a long time ago. The stock has just been returning an amazing value to shareholders over the long run. And the company, they've been IPO'd now for about 14 years or so, and they started out at IPO price was like in 14 to $22 range, and look how far they've come over this time. So I think Chipotle stock is an excellent buy. I think if you're looking to trade this stock, I think it would be best to wait to see if it breaks out past that resistance level. So you could just basically be tracking the price at around 940, and if we see a breakout or a gap up in pre-market trading, then this could be a potential profit. But that's with me. I like to, when I'm trading things like that, I like to take a look at that resistance, and I don't like to buy until it's actually broke out past that resistance, because sometimes these stocks hit resistance and then they go back down. But if you guys are long term, I think it's an excellent long term investment. And don't be intimidated by the share price. $900 per share. Some of you guys out there can't afford one whole share. There's a lot of options for you. You can use fractional trading. So I personally use Fidelity, and there's some other fractional trading apps like Robinhood and Stash. You can just invest $5, $10, $20 a day and build up a position slowly, guys. So if you just invested like $20 a week, you'd be able to get a share by the end of the year. And small amounts count, guys. So whenever you're doing things like fractional shares and saying, don't ignore the power of small amounts. Small, consistent actions over a long period of time turn into extraordinary results. So that's it, guys. I hope you enjoyed this video. So please give me a big thumbs up if you like my content. And if you want more free videos like this covering Chipotle and many other stocks in the market that you can make a lot of money on and prepare for, the long-term things like retirement, or whether you want to buy a house or whatever your financial goal is, just subscribe to my channel, hit that red button below to get more free content when I add to this channel. So that's it for now, guys. I hope you enjoyed this video, and take care.